So here we're going to calculate the depreciation for the asset which was sold, right? So for this, we are told that the financial period ends on 29 February 2024, right? Then now we have to calculate the depreciation of the asset which was sold. And then please pause the video to read the statement. So also, okay, now because we're using the diminishing balance method, you know that we're going to say, when you calculate depreciation, you're going to say cost price minus accumulated depreciation, then get a carrying value. Then from our carrying value, we're going to now calculate depreciation by saying rate of depreciation times the month. So the rates we are told is 20% per annum, right? So let's calculate depreciation for this asset. So okay, no, it was sold on the 1st of September, right? And then it was purchased on the 1st of July 2021. So I've already drawn my timeline here. We purchased this asset here. So for 2021 we had this asset from July until February, which is 8 months. For 2022 we had it from March until February, which is 12 months. And then for 2023 we had it from March until August, because we sold it at the beginning of September, so we only had it from March until August, which is 6 months. Now to calculate depreciation, you take the cost price, you minus accumulated depreciation, because this is 2021, it's here, we didn't have any depreciation here, so we're just going to say times 20 over 100, then times 8 over 12, right? And then you're going to get 32,000. Then for 2022, we're going to firstly say cost price minus depreciation to get the carrying value. Then from the carrying value, we're going to multiply by 20 over 100 times 12 over 12, because here it stayed for 12 months, right? And then you get what? You get 41,600. And then for year 3, you're going to minus this depreciation for year 1 and this depreciation for year 2. So you're going to say minus 32,000 plus 41,600. You get your carrying value. Then from your carrying value, you're going to say times 20 over 100 times 6 over 12, because it stayed for 6 months. And then you're going to get your depreciation, which is 16,640. This one is going to go to your statement of what? Of profit or loss, or statement of comprehensive income, right? Under the expenses as your depreciation for this year, right? And when you add all your depreciations together, you're going to use them when you're preparing what? Your asset disposal, because this is the asset which was sold. So when you prepare your asset disposal, on the credit side, you're going to have accumulated depreciation. And then you're going to record all the sum of 32 plus 41 plus 16,000. Going to record it here.